Assalamu alaikum. Welcome to Learn at Your Desk. Today, we are going to learn the very first lesson of financial accounting, that is Introduction to Accounting. Before we begin, let's see what we are going to learn in this lesson. Overview. In this lesson, we are going to focus on the following topics. What is accounting? What is bookkeeping? Difference between bookkeeping and accounting. Objectives of accounting. Functions of accounting. Users of accounting information. Advantages and limitations of accounting, and lastly, branches of accounting. So what we are waiting for? Let's start learning. Introduction. Business is an economic activity, and finance or money is regarded as the lifeblood of the business. Why? Because business's main objective is to earn profit. But, how do we know if the business is earning profit or loss? Well, the answer is very simple, and that is, by accounting. What is accounting? Accounting is the process of identifying, measuring and communicating the economic information of an organization for decision-making to its users. Now, let's see some definitions of accounting. Definitions of accounting. Here I'm having two definitions. First is by American Institute of Certified Public Accountant. According to this institute, accounting is the art of recording, classifying, analyzing and summarizing in a significant manner, and in terms of money transactions and events, which are in part, at least, of a financial character and interpreting the result thereof. Let's see one more definition by American Accounting Association. According to this association, accounting is the process of identifying, measuring, and communicating information, to permit judgment and decisions by the users of accounts. From these definitions, we can say accounting involves identifying the business transaction, which are in terms of money, recording those transactions, classifying this recorded data, summarizing it into financial statement, analyzing the financial statements, and interpreting the result from it, and finally, communicating this financial information to the users for making various decisions. Hence, in order to achieve business objectives, and to know the financial position of the business, every business has to keep a systematic record of its business transaction. Now, let's see what is meant by bookkeeping. What is bookkeeping? Sometimes the term bookkeeping is used as accounting, but it's not. Bookkeeping is the recording phase of accounting. As bookkeeping means, recording of daily business transactions, in a systematic manner. Whereas, accounting is a wider term, and includes besides bookkeeping, preparation of financial statements, their analysis and interpretation as well. Hence, bookkeeping is first stage of accounting. Whereas, the process of accounting begins where the bookkeeping process ends. Okay. Let's see the difference between them. Bookkeeping versus accounting. Bookkeeping deals with recording business transactions, whereas accounting includes recording, classifying, summarizing, analyzing and interpreting of business transactions. Bookkeeping has a limited scope, of only recording business transactions, in original books of accounts. Whereas, accounting has a wider scope, which includes bookkeeping, analysis, and interpretation of business information. Bookkeeping does not require any special skill or knowledge, so clerks or any lower level of management can perform this task. Whereas, accounting requires special skill and knowledge. That's why only senior staff and accountants with a higher level of knowledge do this. Bookkeeping does not give a complete picture of the financial conditions of the business. Whereas, accounting critically analyze, interprets the business transactions, and shows the complete picture of the financial condition of the business. Bookkeeping does not help in complying with any legal formalities, whereas accounting helps in complying with legal formalities. Bookkeeping does not provide any information for taking managerial decisions, whereas accounting provides information for taking managerial decisions. Bookkeeping has no branches, whereas accounting has several branches like cost accounting, management accounting, etc. Okay. Now you know what is bookkeeping and what is accounting. Next, let us know the main objectives of accounting. Objectives of accounting. The main objectives of accounting are: first, to maintain a systematic record of business transactions. Second, to ascertain profit or loss of the business. Third, to know the financial position of the business. Fourth, to provide financial information to various parties for decision making. And fifth, to know the solvency position of the business. Now, let's see various functions of accounting. Functions of accounting. Okay. Let's see some basic functions of accounting. You can also consider them as the accounting features or the steps of accounting process. All of them are similar, as it says what accounting actually do. First function is to identifying the business transactions and events. First, accounting identifies business transactions and events of a specific entity. But, what is transaction? Well, a transaction is an exchange in which each participant receives or sacrifice value. And that value should be measured in terms of money. For example, Mr. B is the businessman and today he has the following two transactions. First, Mr. B paid office rent 10,000. And second, Mr. B paid house rent 5,000. Now, can you identify which is the business transaction? Obviously, office rent is the business transaction and the house rent is the businessman personal transaction, which needs to record separately. Second function is recording. Recording is the basic function of accounting. After identifying, all business transactions are recorded in the original books of accounts, known as journal. So the process of recording business transaction is known as journalizing. Third function is classifying. Classifying is concerned with systematic analysis of recorded data, where all the transactions of one nature is grouped together in one place, in order to provide information in more computable and usable form. Generally, the books containing classified information is known as ledger, in which different accounts are opened. For example, grouping all purchase transaction into one purchase account to know the total purchases. Fourth function is summarizing. Summarizing involves the preparation of financial statements, such as income statement, which is also known as profit and loss account, balance sheet, statement of cash flow and statement of value added. Fifth function is analyzing. Financial statements are analyzed, and its main purpose is to identify the financial strengths and weakness of the enterprise. It also provides the basis for interpretation. Sixth function is interpreting. The recorded financial data analyzed and interpreted in a manner that will enable the end user to make a meaningful judgment about the financial conditions and profitability of business operations. Seventh function is communication. Communication is concerned with the transmission of summarized, analyzed, and interpreted information to the users, to enable them to make reasonable decisions. Accounting reports includes not only profit and loss account and the balance sheet, but also other additional information are submitted, in the form of accounting ratios, graphs, diagrams, fund flow statement, etc. Now, let's see who are the users of this accounting information. Users of accounting information. Users of accounting information are broadly classified into two types. Internal users. and external users. First, let's see internal users. Internal users, also known as primary users, are directly involved in managing and operating business enterprise. These persons need accounting information for the efficient and smooth running of business. Internal users are further classified into three. First, owners. Owner uses accounting information for analyzing the viability and profitability of their investments and to determine any future course of action. Second, managers. Managers uses this information for analyzing the organization's performance, position, and responding appropriately to improve the company results. And third, employees. Employees uses this information for assessing the company's profitability and its consequences on their future remuneration or salary and their job security. Now let's see the external users. External users are also known as secondary users. They can be an individual or an organization who have present or future interest in the business enterprise, but they are not part of the management. External users are further classified into five. First, creditors. Creditors uses this information for determining the creditworthiness of the organization. Second, investors. Investors uses this information for analyzing the feasibility of investing in the company. Because investors wants to make sure they can earn a reasonable return on their investment before they commit any financial resources to the company. Third, customers. Customers uses this information for assessing the financial position of its suppliers, which is necessary for them to maintain a stable source of supply in the long term. Fourth, tax authorities. Tax authorities uses this information for determining the credibility of the tax returns filed on behalf of the company. And fifth, regulatory authorities. Regulatory authorities uses this information for ensuring that the company's disclosure of accounting information is in accordance with the rules and regulations, in order to protect the interest of the stakeholders, who actually rely on such information for their decisions. Now, let us see some advantages of accounting. Advantages of accounting. Here are some of the advantages of accounting. It is helpful in the management of business. Accounting helps the management in planning and controlling business activities. It provides complete and systematic record. Accounting is a complete and systematic recording of business transactions, so the limitation of humans that cannot keep all transactions in mind can be overcome by accounting. It enables comparative study. Proper books of accounts can be further used to compare expenses, sales, profits, etc. of the business. Hence, accounting helps in interfirm as well as intrafirm comparison. It is helpful in raising loans. Accounting information is of great help while raising loans from banks, like IDBI, ICICI, etc. These financial institutions lend money based on profitability and soundness of business enterprise. And the profitability and soundness of business is measured by the income statement and balance sheet. It is helpful in the assessment of tax liability. Accounting also facilitates the settlement of tax liability with the authorities by maintaining proper books of accounts. It acts as an evidence in court of law. Proper books of accounts maintained in a systematic manner, which are supported by authenticated documents, like vouchers, receipts, etc., act as legal evidence in court of law, if there is any case of dispute. It provide information regarding the financial position. Accounting reports the financial position of the business by preparing a balance sheet at the end of each accounting period. And it helps in valuation of business. In case of sale of business or conversion of one business into another, true and fair value of the business is calculated or determined through accounting. Let's see some limitations as well. Limitations of accounting. In spite of many advantages, there are also some limitations of accounting. It is based on historical cost. Well, accounts are prepared based on historical cost, means the original cost, and the figures given in financial statements do not show the effect of changes in the price level. So accounting is historical in nature, and reflects only the past position of business organization. It records only monetary transactions. Accounting provides incomplete information, as it records only those transactions, which can be expressed and measured in terms of money. Window dressing. Window dressing refers to the practice of manipulating accounts, so the financial statements may disclose more favorable position than the actual position. It shows an estimated position, and not real position. Sometimes the records prepared in accounting fails to show a true and fair position of profitability and financial soundness of the business enterprise. Omission of qualitative information. Since accounting considers only monetary matters, the qualitative element like the quality of management, quality of labor force, etc. are completely omitted from the books, as these cannot be expressed in monetary terms. It is unsuitable for forecasting. Financial accounts are only a record of past events and transactions, but there is a continuous change in the demand of the product, price of the product, etc. That's why, financial analysis based on past events may not be of much use for forecasting. Lastly, let's see various branches of accounting. Branches of accounting. There are many branches of accounting. But here, we are going to discuss only 5 branches. First, financial accounting. Financial accounting is primarily concerned with providing financial information about the business enterprise to all its stakeholders. It deals with recording, classifying, and summarizing business events. So we are mainly going to concentrate on this branch of accounting in coming days. Second, cost accounting. Cost accounting is concerned with the process of accounting and controlling the cost of units produced or service rendered by the business enterprise. Its main focus will be on cost per unit. Third, management accounting. Management accounting is concerned with internal reporting of information to the management, for planning, controlling operations, decision-making, and formulating long-term plans. Fourth, social responsibility accounting. Social responsibility accounting is concerned with the process of identifying, measuring, and communicating about the contribution made by the business enterprise to the society. Fifth, human resources accounting. Human resources accounting is concerned with the process of identifying and reporting the investments made in the human resources of an organization. That's it in this lesson. Thanks for watching. Go through with the lesson and test your knowledge with quiz in TYK section. You can also find do-it-yourself workbook for your practice in DIY section. If you found this lesson useful, then like, share, comment and subscribe to learn at your desk. Because sharing knowledge means gaining knowledge. And don't forget to hit that bell icon to get notified when I upload a new lesson. Stay tuned, learners. Coming up next, basic theories of accounting. Till then, take care and keep learning. Allah Hafiz.